One. Hey, welcome to Academic Market Insights. We did not coordinate before I hit record who was going to do the intro, so I just jumped right into it. I'm Dr. Russell Rhoads from Indiana School of Business, and with me is Dr. Ademiak. We're going with Dr. Alpha today, I think, because we're going to talk about maybe ways that you can generate a little bit of alpha based on some market seasonality. So we're going to talk about the Santa Claus Rally, and I'm getting ready to put Dr. Alpha on the spot. What do you know about the Santa Claus Rally?
Well, the little that I do know about the Santa Claus Rally is that at the end of the year, traders are doing a couple of different things. One, they're getting ready to close out the books. And two, sometimes there's a sell-off at the end of the year because people are looking to take money out of the market so they can buy Christmas presents. They might be looking to close positions to either take gains or losses to get ready for tax season. So I'm very curious to hear more about the Santa Claus Rally, but fundamentally, from my understanding, that's what people are doing. They're getting ready for the end of the year and for that holiday shopping.
And kind of squaring themselves up for the following year. But there is this belief that December and then the period between Christmas and New Year's, between Christmas Eve and New Year's Eve, is generally a bullish time for the stock market. I've also seen it defined as the day before Christmas to the first 2 days in the following year. I think that's a case of somebody trying to fit the best results based on that kind of seasonality. But, you know, what it is, I'm going to talk about some data backing it up. And for educational purposes only, we're going to talk about how you might go about trading it. So what it is, there's a belief that the stock market tends to trade higher over the Christmas season. And Dr. Alpha, she mentioned a few of these already. There's a belief that for behavioral reasons, we're all happy. It's the holidays. You're looking forward to the new year. Those are potential behavioral reasons. I mean, there are studies out there that say that there is a correlation between how the stock market does and the weather in New York City. Now, that probably goes back to when most of the trading was done on a floor, but the way people feel does impact how they behave. I mean, that's why we have behavioral finance studies now. And then the operational reasons, Dr. Alpha mentioned these as well. Institutional investors are not around as much, and there's a belief that retail investors or individuals are more bullish than their institutional counterparts. So you have more natural buyers than natural two-sided traders. And then also there's some taking gains and taking losses tax-wise that happens in December that might have a bit of an influence on the market as well. There is a raised hand. Yes, Dr. Alpha.
Yes. So do you remember Hurricane Sandy?
I do.
And so for those who don't remember Hurricane Sandy, a hurricane was a huge, huge hurricane that hit. And if you lived in New York City during that time period, everything stopped. My sister was visiting a friend and she said nobody went outside, nobody went and did anything. All the restaurants were closed. And I can just imagine that trading during that time period. And I haven't looked at the data, but I would imagine that that would be a case of correlating the weather to the overall market because people in New York City just didn't go outside for those couple of days.
Certain things involved in the financial markets, everything in front of us is electronic, but there are certain aspects that do need to be paid attention to in person. And it's generally at the larger volume institutional end of things. If those folks can't get their car out of their flooded garage, which my understanding is a lot of people's cars were just underwater for some time after Hurricane Sandy worked its way up to New York. But it does have a dramatic impact on the amount of liquidity that is out there, for
Well,
sure.
and Hurricane Sandy happened before the pandemic, and we hadn't transitioned to being able to fully trade. Like if you worked for a prop shop, you weren't trading from home. You went into the office to trade. Even though it was still electronically that you were trading, the infrastructure was you didn't bring your work home. I remember working for the bank and the idea of a thumb drive, you couldn't use a thumb drive because they didn't want you to take anything. In the movie Margin Call, one of the things that I thought, well, that's just wrong, is they take a thumb drive and download some of the data and then really walk through some of the risk. Well, during that time period that the movie was supposed to be taking place, people didn't do that. You don't have access to that. So during the time period of Hurricane Sandy, people weren't trading at home. So I can
Right.
imagine just the volumes went down. And now we've obviously adjusted since the pandemic and people can trade from home. Um, and things are different, but yeah.
And the lack of liquidity in any time tends to result in more volatility. If you've got, and that's where if you take these bullet points here, and it's like, retail's a little bit more involved than institutional right now. If you combine that with some of the in year-end cheer, et cetera, the belief is, and notice I keep saying belief, that the
Mhm.
stock market's going to rally. Now, what I did was I did two very quick studies on this one. The first one, I just took a look at how do stocks do in December, because the Santa Claus Rally was originally formulated, I think, by the Stock Traders Almanac folks, and they looked at just before Christmas to the end of the year or just after the end of the year. It got expanded to Thanksgiving to Christmas.
Mm.
And then a lot, and one, you'll see why in just a minute, why it got expanded to a different time period a few years ago. So I did what the monthly performance is in December versus other months, going back over the last 24 years. And then I took a look at what the stock market did between Christmas Eve and New Year's Eve every year from 2000 through 2023. And then I also did it for three markets, because I knew going
Mhm.
into this that one of the markets tends to do much better in the fourth quarter than the other two. And the
Mm.
three markets I'm talking about are the S&P 500, the NASDAQ 100, and the Russell 2000.
Got it.
And here we go. The average monthly return, and what these numbers are, the average monthly return for each of these indexes through the end of, or I'm sorry, for each month from the year 2000 to the year 2023. So that's a 24-year time frame. And what I'm trying to find is I don't think I can draw with the way that I'm doing this. So I'll just have to try to point a bit. Notice the average return in the last 3 months of the year for the Russell 2000. Those are pretty solid numbers, especially December uh, with a 1.9%.
That's
So the
nice.
Russell 2000 has this really strange seasonality relative to the other two indexes. And if any index is one that you're going to look at for year-end positive performance, I think you definitely are going to lean toward the Russell 2000 over the S&P 500 or the NASDAQ 100. So,
But I'm also impressed if you look at the S&P 500 November. And
um,
is this part of the reason why they expanded?
no. That's not why they
Okay.
expanded. You'll see why you'll see why they expanded. It was there was a 4-year period where if you'd bought Christmas Eve and held through New Year's Eve, you would have gotten absolutely obliterated.
Mm, okay. But it's interesting, and even in the NASDAQ, and you can't see my mouse moving, but if you look at October and November, there's a nice bump right
Right.
before December.
Yeah, that and some of that. Notice September.
Hmm.
Uh, keep in mind 2008's in here,
Mm,
which so October, November, a couple of times we rebounded from pretty nasty sell-offs.
right.
But and notice that I think it's kind of interesting that the Russell 2000, the October performance is pretty weak relative to the other ones. And if you're taking into account rebounding off of a big September sell-off, the financials tend to benefit an awful lot from that, and growth stocks tend to benefit an awful lot from that. And there's more of a value bent to the Russell 2000. So I think that's why it doesn't have a great October. But I looking at those numbers, and I've thought about those numbers in the past. It really does. I do believe it's a function of how bad September was. How bad September was a couple of times, and September was bad a couple of times.
And this
Um,
data includes 9/11 as well, right?
yep, yep.
Yep.
And that's a similar situation.
Mhm.
In the back of my mind, I was sitting here thinking there's more than one thing that happened in
Yeah.
September. We've had more than one bad September, and I couldn't recall what the other ones were. Now, as far as win percentage goes, this is pretty fun. Um, the win percent, and this is 24 observations. So you can see in November, we've been up 75% of the time on each index. That means that we've been up. What's 75% of 24? 18? 18
Mhm.
of the last 24, we've been
Wow.
higher. No, I know. And look at the beginning of the year. January, it's pretty interesting how um, you know how positive the end of the year has been. Again, there are a couple of instances where those last 2 months are coming off a really bad October, which probably helps a bit. And the other thing that I've always found kind of interesting is look at the NDX in July. I've always been aware that the Nasdaq 100 outperforms in July. We do get mid-year earnings out of all of the big components of NDX. That's the only thing that I can come up with for a reason behind that one. Um, yeah,
I
you're
know I
not
do
thinking.
a lot of
You're not. I'm
shopping.
looking at you, and you're
Mhm.
not thinking anything. And I've had more than 14 seconds to give that one some thought. I'm very intrigued by the end of the year performance of the Russell 2000 versus the Nasdaq 100.
Yeah.
That's the one that and for full disclosure, for the last couple of years, based on these numbers, I've been taking a short NDX future, long RUT future position at the end of October and holding it through the end of the year. It's just something that's done fairly well trading wise. So then the other performance, a lot of red numbers in there.
Mhm.
And what this is I'm taking the close for each of these indexes uh, on the day before Christmas and looking at what the performance is through the last day of the year. And like 2014, 15, 16, 17, that's when all of a sudden we did start hearing about maybe the Santa Claus Rally doesn't work anymore. Maybe we should be looking at buying one market and shorting another. But the Christmas Eve to New Year's Eve thing completely fell apart. But notice what happened after it fell apart. If after 4 horrible years you'd started following this, you'd have done all right, especially in 2018 when we got a really nice rally going into the end of the year.
Well, I also think it's kind of interesting if we were to pair this with maybe economic data on top of it. So 2002 was post 9/11, and it took a while for our economy to
Oh yeah,
rebound. We
yeah.
had a substantial number of joblessness. It was a challenge to come back. We had some issues in 2005, 2006 with uh, the first wave of mortgages. And then interesting, 2008 is really good, but at least I know in the financial sector, 2009 and 2010, those were challenging years. There are so many people had lost their jobs in 2008, and people were coming back to the market. That's when Obama had extended unemployment for like 2 years. You could be on unemployment. And those are the years when the Santa Claus Rally wasn't working. So I'd again be very curious about how to layer on some of that economic data on top of the Santa Claus Rally.
And the other thing, one of those long list of things that I'd love to work on with respect to this is where were we leading up to Christmas Eve?
Mm,
Was the market already down? Was the market already up?
sure.
I've done that. I've done it before. I haven't updated the numbers. I feel like I didn't find a whole lot trying to do that, but um, anybody that wants to try that out, you can get this data off of Yahoo Finance, no problem, or Google Finance, or a couple of other places. So, do we trade it? Maybe, maybe not. I don't know. Um, don't blindly buy and sell based on history. And Dr. Affleck, you really you teed it up for me there when you said basically saying do some more work. What was the economy like? Were we in a were we in a what was the rate environment like? Several of those, and I'll go back for a second. A lot of this 2018 to 2023 stuff was in a very low interest rate environment.
Mm,
We did have, yeah, and which is, yeah, if you're getting, yeah, let's say you get a check from grandma for Christmas, and it's a good check, so you could actually invest it as opposed to, buying a couple of gallons of gas. And if the stock market's done really well, you're probably more willing to put it in the stock market than not. So I wouldn't be the least bit surprised if that people are always very much skewed by what the recent performance has been. So I wouldn't be the least bit surprised if there is at least a bit of a lead in to the performance. And then there's probably some window dressing that goes on as well. And window dressing is when
mm, yep.
stocks have been, if stocks have done particularly well, maybe you want them to appear at the top of the list of your holdings at the end of different measurement periods. So you look a little bit smarter. I've never agreed with that one, but I know people actually do that. Where we better add Apple because we want it to be one of our top 5 holdings for no other reason than that.
Well, and sticking with window dressing, another thing that's done quite a bit is if you're one of the larger like mutual fund or the ETF funds, they will close funds that are underperforming and then switch or take your investment and put it into another fund that's similar, and it will look like there's been better performance. So there's a lot of that type of activity that happens.
Yes, there is. So I'm gonna just keep personal stories where I worked at places that they did things like that to myself. I did want to note the Russell 2000 does tend to outperform on average going into the end of the year. And I know from looking at that historically that there's not a whole lot of rhyme or reason as to what has happened earlier in the year. In fact, you can see that the Russell tends to struggle more earlier in the year than the other two
Mm,
indexes. So it truly is, there is some sort of seasonality going on there where you don't
absolutely.
want to, I always have in the back of my mind, don't be short small caps in the fourth quarter.
Hmm.
Just don't. There are two other indexes to work with there. And I didn't include it, but you know what index underperforms between, who hates Christmas? The Europeans.
Oh no.
The average, yeah, because I do some work on international indexes, and the average, I forgot what the average is for in December for the Euro Stocks 50, but it's like really, really, really low. And their win percentage is less than 50% in Christmas time as well. So uh, they don't participate in the Christmas rally in Europe.
Got
But
it.
long rut and short NDX is how I've played this historically. Sometimes actually because tech has been on such a run. I think last year, I know last year, I did like 100% long Russell 2000, 50% short Nasdaq, and 50% short S&P 500. That's how I traded it last year. This year it's just rut versus the S&P 500, and that's really just because tech has been so strong, and who's to say Tesla and Nvidia don't double over the course of December. So that's why I made that choice this year. How are you going to trade it?
I'm gonna buy more junk from China.
Okay, there you
That's
go.
my
Like
big
that.
trade.
Oh, that's vintage.
Vintage junk.
That's vintage IUPUI, which is not an entity anymore. So where's my stop sharing?
Yeah, my goal is to make sure I don't buy too much junk for the kids for Christmas.
I understand. You can always just rewrap it for their birthdays.
There are a couple things that I thought, did I get to this last year? So
I know exactly what you mean. So are you going to go? So you're not going to buy small cap stocks for your small people.
I'm not. Luke is much more interested in commodities, specifically precious metals.
We can teach them about that. No problem at
Yeah,
all.
he's very, very much into precious metals and stones. So
I like it.
commodities trader he is.
With that, I'm going to let you take us out.
Okay, if you enjoyed today, and we really appreciate you joining us, we enjoy doing these, we enjoy the different discussions. Again, these are some of the fun topics that we can't necessarily get to in class. Please hit subscribe and please hit like. Again, it's just really helpful for us. If you have comments, questions, future topics, constructive criticism, please leave them in comments below. Uh, Also, if you're feeling up for it, please have conversations on LinkedIn. We had a small conversation generated from last week's, from the very controversial, maybe tariffs are a good thing conversation. So please, we're welcome to the discussion. We enjoy the discussion, and it just helps with future sessions.
So
Again,
and
thank you so much.
it helps us be better professors.
It does. It
That's what,
really
and
does.
it gives me an excuse to wear this thing.
Yeah.
I've had it
And
2 years and I've worn it twice now.
my
So
kid made these earrings for me at the Museum of Science and Industry.
is there anybody that has like a cool Christmas suit or anything like that?
Oh,
You almost
yeah,
forgot, didn't you?
I
So
did. The kid has an
this is
amazing
cool, but
Christmas.
that's better.
Yeah, it's
So
pretty. He looks pretty good. He looks like yeah, my mom said he looks like he's from the Rat Pack.
that's exactly what you want out of a son.
Yeah.
All right. Well, with that, hit subscribe, hit like, have a good holiday, make some money trading, maybe, and give us some feedback. Tell us what you'd like us to talk about, and there's a good chance if you ask about anything these days, we'll work it into one of our videos. So with that, we will see you with the next episode of Academic Market Insights.
Thank you.
And there we go.